everybody, it's Lawrence from financialthing.com. How are you guys doing? It's nice to see you. A little bit unprepared. Here we go. Welcome to the Financial Thing. Gosh, we're a little over to the... There we go. Who knows? Welcome to the Financial Thing Thursday evening live stream. It's been a while, hasn't it? But glad that you are here. Glad to be here. We need to have a chat about what is going on in the P2P lending market. Oh, goodness. What's going on in the financial markets? What's going on with the investing world? We have a lot to get through this evening, but if you had not checked out last week's live stream with Cufflink, go check it out. It's on the Financial Thing YouTube channel. Hope you enjoyed it. I thought it was a good chat that we had with Matt Freeman and Natalie Weeks. Cufflink. See what's going on. I heard it's cold over in England. Today is a beautifully warm, sunny 24, 25 degrees here in Orlando. How can you be mad about that? What great weather. But we have a lot to get through this evening, so we're going to crack on. We have a letter from the mailbag. Obviously we're going to talk about maybe a little bit about landlord invest, what's going on over there. Give you my thoughts and feelings about the situation, what's going on with the FCA. We're going to talk about Funding Secure, their latest update that they had on their administration situation. We'll look at the Trading 212 portfolio, do some news. It would be remiss not to talk about what is going on in the Bitcoin market right now after the presidential election. Could have gone either way, but that was the result, and some things have happened. Important stuff to talk about. Yeah, so quick shout out to everybody here. If you can, please hit the stream like. It just takes a minute. It won't hurt your thumb. Helps the stupidity of the YouTube algorithm show that we are here and people can benefit from the information, hopefully, that is provided. Of course, sponsor of the stream, it's Cufflink, going up to 9.13% gross per annum, over 350 million pounds invested to date since 2016. Zero investor losses so far. Capital is at risk. Please don't invest unless you're prepared to lose money. Please check rates on Cufflink's websites as investor rates do change. And you can sign up at join.cufflink.com/financial-thing. The link is in the description below down there. If you haven't checked out Cufflink, you haven't got an account yet, get an account. Go check it out. Quick hi to everybody in the stream. We have Pizza Vince here. Chilly Leatherhead. I heard it snowed today. Even down in Bournemouth it snowed. My niece texted me. Hi from the Peak District. Isn't it a little early to be snowing? November 21st. Aki Chap is here from a wonderfully wintry Accrington. I do like the snow. I think it's just something magical about snow, especially if it happens around Christmas time. But November is just too early. Jimbo Naughty in Frigidaire, Cambridge. Dave Dawson is here. Mark Mason is here. Hi, Mark. Thanks for joining. Albel Nyron from a dry, warm, and sunny Spain. Again, hopefully no rain there. We've had enough of those issues there. Paul Bagworth in Kenilworth. And Alan Stratford from a beautiful snowy Malvern. Stephen Hale in Nottingham. Dan, the barber. Are you a barber, Dan, or is that just your name? Hi from a snowy, dark peak. Which peak would that be? We're gonna try we'll do a little sound effects today, maybe. Hopefully that wasn't too loud. We've got a few sound effects in the bank. This is a good one.
Let's give him a big, fat, duh. They're not doing it.
I like that one. Anyway. Yeah, let's get to it. Let's get right into the news and let's get moving. Time is waiting for no man, as they say. Harley is snoozing. You can tell that. She's always ready. Let's start off here with a little zoom action. So people like me that have bad eyes can see this. But SOMO marks 10 years of zero investor losses for investors. Manchester-backed, property-backed lending firm SOMO recently celebrated its 10-year birthday by confirming that none of its investors have lost any of their capital with the firm. This is an advertising piece too, so we have to take it for what they tell us. We are proud of our investors' zero loss capital record and our ability to generate strong returns to our loyal investors, say SOMO's founder and chief executive Louis Alexander, or Louis Alexander, how you pronounce your name. I do not know. I have invited Louis to come on the stream. Not going to reply yes, but I would like to get SOMO onto the stream. And also, by the way, incidentally, I did have a little reach out from another peer-to-peer company we haven't had on the stream in a long time, who I think we're going to have a catch-up and maybe get them back on soon. So, yeah. Moving on, because we are going to go quickly. Let's talk about Landlord Invest. First, on October the 28th, there was a article on the Alternative Credit Investor about mooting a wind down. Moots. To be honest, I don't even know what moots means. What is the moots meaning? Moots is short for mutual followers, referring to people who follow and generally actively engage with each other. No, that's not it. Raises a question or topic for discussion. So I would imagine that would be the actual meaning of what is going on here. UK peer-to-peer lending platform Landlord Invest is facing a potential wind down amid investigations by the Financial Conduct Authority. In a post on LinkedIn at the weekend, Landlord Invest managing partner Philip Karadagi said the regulator was pushing to wind us down for reasons unknown to us. He added that the firm would do as much as possible to wind down ourselves, as it will be much more beneficial than the regulator appointing administrators and a lot cheaper. Karadagi said he could only speculate on the reasons for the ongoing regulatory intervention, saying the firm had been a shining light in the UK's peer-to-peer industry for many years. Philip also confirmed that the firm had not decided yet to wind down, but the firm's perception is the regulator, aka the FCA, wishes for us to do so due to their overly aggressive approach over the last couple of weeks. He said the FCA was dedicating significant resources to its investigation of the peer-to-peer lender and wanted to send in a team of investigators that would outnumber Landlord Invest's entire workforce. Karadagi added, it makes little sense given the size of the firm and otherwise spotless compliance track record over nearly 8 years. And then just 2 days later came this piece of news. Landlord Invest closes to new business amid FCA probe. UK platform, peer-to-peer platform Landlord Invest has been told by the regulators to cease onboarding of new businesses and to instate a interim chief executive. In an email to Landlord Invest employees on October 30th, seen by Alternative Credit Investor, the Financial Conduct Authority also had several queries relating to co-founder and chief executive Philip Karadagi. The city watchdog asked for confirmation that Karadagi no longer has access to the firm and client money bank accounts. It also asked how Landlord Invest plans to recover £17,000 direct loan used for investments in Karadagi's name and for copies of 4 RBS bank statements to date showing the last week of transactions. The FCA also asked the Landlord Invest employees whether Karadagi had transferred any money since its team had met with the firm on October 22nd. Philip Karadagi said in a post on LinkedIn that he's now had official confirmation that the FCA is forcing us to wind down. They've sent us an email asking us not to accept any further business. They did not send the email to me directly, but to my co-workers only, despite that I hold various regulatory roles and I am the chief executive. I will digest these developments and provide further updates as appropriate. Now, I have been looking on the thread on the Independent Forum, and Philip had posted here on October 28th that you've been failed by those who were supposed to protect you for many years. Indeed, I'm sorry that I did not have the courage to say it earlier, although I did my best to warn you several times, but that was met by doubt and rejection. I'm not taking a big personal, professional, and monetary risk by I am taking a big personal, professional, and monetary risk by posting this, but it is only the simple truth. There are some comments on here. Let's see if he addressed anything else on here. This was November 1st, following my update. This is from Philip. Above, we've decided to keep the secondary market open and business as usual until further notice, etc., etc. Just wanted to thank everyone for their support in the last weeks, from lenders to brokers and borrowers. It shows we've been doing something good in addition to enriching various stakeholders. It makes me proud to see. Running a small peer-to-peer platform has been more stressful and demanding than managing billions, which I did in my previous job, but also far more enriching and educational. Please keep sharing your experiences, good and bad. And that was the last time he posted on the forum. So very, very interesting situation going on at Landlord Invest. A lot of speculation as to what is going on over there, why this is happening. To me, I don't have any insider information. I have reached out to Philip and asked him to come on the screen if he would like to do that. So I'll wait for a reply. I would imagine he'll probably decline that if I had to take a guess, because, obviously he's got to be careful about what he says, and it could be indemnifying to him in the future. But if I had to take a guess, I think somebody has probably said something or written something or complained to the FCA and given some evidence possibly about things that have happened maybe at Landlord Invest. I can't imagine another reason other than the FCA just being very, very gun-shy of what has happened in the past with failed peer-to-peer companies as to why they would take such an aggressive attitude towards Landlord Invest, and especially towards Philip. Philip has always been very outspoken, and I credit him for that. He's always been a very outspoken person, and maybe that's the reason. Maybe the FCA knows that. But it seems to me like somebody has provided the FCA something that has made them a little nervous about things. I think it's very interesting that Landlord Invest has decided to keep their secondary market open. I think that's a testament to them, to be honest, that they've given investors a chance to be able to sell whatever it is they want on the secondary market. That is, I would say hats off to them for that, because it gives people an exit. It's disappointing that the FCA has not addressed investors. I've heard from many people, and I have not received anything myself from the FCA regarding the situation at Landlord Invest. It's very troubling that if Landlord Invest has done nothing wrong, that they would come down on the company so hard like that. And basically, intent is to put them out of business at this point, to make them shut down. That is a scary proposition, to think that somebody could spend all this money and time creating a business, and then the powers that be come in, swoop it, say, you've been doing something wrong, we're going to close you down, you need to stop operating. Think of the time, the stress, the money that has been spent on creating this business. Just from a technological standpoint, it's very expensive to create a peer-to-peer lending company and to go through the scrutiny at FCA, all the regulatory hurdles that had to be jumped through. So disappointing. Now, having said that, if Landlord Invest has done something wrong that has warranted the FCA to go after them, then that turns into a different discussion. But the lack of information that everybody has right now is quite damaging to Landlord Invest in their business. So we'll be keeping an eye on that. I did look on his LinkedIn post to see if he'd been posting anything down there, and the last post I found was from a couple of weeks ago. If anyone believes that they can make me shut up, I can assure you it will not work. I will continue acting and doing what I believe is best for our customers, which has always been my main priority. After all, it is my judgment that has saved and protected us for nearly a decade in otherwise a mainly corrupted, crocked, and failed industry. Pretty strong words. I didn't see anything else from Philip so far as posts go. He again has to be careful what he says. I would imagine at this point, pretty tentative, dangerous situation for him dealing with the FCA, but we'll keep an eye on this situation and keep you posted as things come up. Let's see. We had the Alternative Credit Awards that happened in November of this year. And there were some of the firms, there was a lot of awards this year. You can see some pictures here if you choose to go look at the Alternative Credit website. But there was a lot of awards that were given out this year. It seemed like everybody in attendance was receiving an award for something. But there are some names that you may recognize on this list. Starting with Innovative Fund of the Year, sub $1 billion US dollars. Notice not pounds, dollars. There was one by Northwall European Opportunities Fund, which I don't know who they are, but highly commended Axia Funder. So interesting. Congrats to them. Mezzanine Lender of the Year, Shojin. Congrats to them. UK Property Development Lender of the Year, sub £1 billion. Relendex wins that one this year. UK Small and Medium Enterprise Finance Provider of the Year, sub £1 billion was ThinCats. And Peer-to-Peer Lender of the Year was Folk to Folk, and ISA Provider of the Year, Easy Money. As we scroll down, so well, that was about it. Those are the ones that are important. Congrats to Cufflink. We see UK Bridging Lender of the Year. Congrats to Relendex. Congrats to Folk. Congrats to Easy Money. Those are firms that we often speak about here on the stream. So it's good to see them getting the recognition that, I think that's pretty cool. Should we give them a round of applause? Let's do it. Look at that. Round of applause to them. That was a pretty weak round of applause, but I like it. So congrats to them. Moving on. Shojin appoints Barclays veteran to the board. Shojin has appointed a Barclays veteran, Wayne Hiley, as a board member and advisor. In addition to his board and risk committee roles, Wayne will focus on working with the lending origination team to help drive sustainable growth for the organization. Hiley has had more than 20 years' experience in the corporate debt market. In September 2020, he retired from his role as head of UK debt restructuring at Barclays Corporate Banking Division. That's a pretty heavy hitter that Shojin has hired over there. Why do you care about this? Because you want to know who the people are that are working within the peer-to-peer lending companies that you are investing your hard-earned money through. And they have gotten a pretty heavy hitter to work alongside them and to advise them and be on the board. So congratulations to them. We got a letter from the FCA. If you are a collateral investor, an unfortunate collateral investor, this was sent out, this was sent out on 11/5, so November 5th. Dear collateral investor, on November the 5th, 2024, the court made a confiscation order under the Proceeds of Crime Act 2002 against Peter Curry, sort of one of the Curry brothers that own Collateral, who was convicted of fraud. The court found that Peter Curry had benefited from his criminal conduct in the sum of £204,669. His available assets were found to be £5,000 made up of tainted gifts. I don't really know what that means, tainted gifts. He has 3 months to satisfy the confiscation order. If he fails to do so, he is liable for a term of 3 months imprisonment and default. Any sums received by the court today satisfying the confiscation order to be paid out to victims as compensation on a pro rata basis. It will be handled by the courts and tribunal service. The proceeds against Andrew Curry have been adjourned until the 12th and 13th of May 2025. So basically what this is saying, if I understand it correctly, I'm not a lawyer, but Peter Curry has to pay back £204,669 and 27p, because that is the amount he was benefited by from his criminal activities, and he has 3 months to do so. If he doesn't do that, he's going to be looking at a 3-month imprisonment for being in default of that. What do you think? It's good to see the court system taking at least some action in these cases of fraud that the Financial Conduct Authority is pushing for, thank God. We need the FCA to do things like this to hold these people accountable to the crimes that they have committed against investors, including myself, who I had some money invested through collateral and had the wool pulled over my eyes when I was a very inexperienced peer-to-peer lender investor in my early Ute days. So good to see that the FCA is doing something and that they're sending out updates and letting us know what is going on. Moving on. This is the Blend November report that they send out. I always like to read this because it's an interesting take on what's going on in the housing market that translates to a lot of peer-to-peer lending loans that are obviously property-based through companies like Easy Money and Cufflink, Folk-to-Folk, etc., etc. 12% more supply of available homes for sale, 12% higher than a year ago. And the highest per estate agent since 2014. We've had strong growth in the house price increases according to the Halifax House Price Index, where house prices have increased by 3.9% year on year in October, easing from 4.6% in September. Northern Ireland continues to provide the strongest annual house price growth, rising by 10% on an annual basis, October 2023 to October 2024. So it's not like those house prices are getting pretty heated over there in Northern Ireland. But again, good to see that the house prices are going in the right direction, as in housing supply. Let us go through very quickly the Funding Secure Administration report that was delivered on the 20th of November 2024, so very recent, just yesterday. There's some things to note in here. I mean, I think this administration, again, is one that will take a long time to run its course. It's been going on for several years now at this point. So I highlighted a couple of things for people that do not want to read through 17 pages of administration talk. For anybody that had the misfortune of being invested through Funding Secure, as did I, it has continued to be necessary for the company to retain one member of staff and one consultant. The general costs and respects of trading are detailed in the receipts and payments account. This is a kind of a tough thing because now people obviously have to pay for this member of staff and a consultant to be employed to do these positions, which of course is going to come out of funds that are collected from the Funding Secure Administration, but this is the high cost of doing business when it comes to administration. It's really something that you can't get by. During the period, this is the loan book of the period of, let's see here, April 23rd, 2024 to 22nd of October, 2024. So that's a 6-month phone book. Let's take a look, a 6-month loan book period. During the period, total gross loan realizations amounted to £918,456, which includes both completed property redemptions and non-property assets. To date, total gross loan realizations amount to £51.1 million. So, money's still coming in. Investors are not going to be made whole when it comes to their losses on Funding Secure's loan book. It's just the way it is. But at least, £51 million of loan realizations is certainly better than what we've seen, for example, from Collateral, which is very little, and also some of the other peer-to-peer lending companies out there. a lot of that, I think, has come down to also a lot of meetings with the Action Committee, who has been representing the investors through Funding Secure. So hats off to them for being there for the investors. Currently, there are 22 remaining defaulted loans amounting to £9.2 million. So still some outstanding. The joint administrators are continuing to realize each loan. The joint administrators are unable to provide timescales of when these remaining loans will be realized. However, the updates on the platform will provide further info. So again, this is ongoing. At the date of our appointment, funds held in the client account, which is connected to the electronic platform account, to £1.97 million. Investor withdrawals were made available in March 2020 until 17th of May 2021. But in May 2021, the account was closed for withdrawals. They've been frozen in the account, which they are still trying to figure out. The e-wallet account was reopened in June 2023 and continues to facilitate investors. As detailed to November 3rd, sorry, not November 3rd, to Section 3.11, 3.14, discussion remains ongoing in respect of the release of the frozen funds. So there are funds that are still frozen. They're trying to figure it out, how those can get released. I don't know the ins and outs of the frozen fund situation, what's going on. Maybe there's somebody in the chat can explain why those funds are still frozen. People can't withdraw them. Continuing the period, investors' withdrawals have amounted to £658,666, and total investor withdrawals to date £34.17 million. So money has been coming out. During the period, gross bank interest amounts to £131,692. So they are getting some interest on the money that is sitting there, which is good. A considerable amount of work is currently and will continue to be done to enable the release of all funds to investors to enhance the returns to investors. There has been a report on the conduct of the directors of the company that's been submitted to the Department of Business, Energy and Industrial Strategy. That was submitted during the first period of the administration. That is confidential. We don't know what was in that report. During investors, we've already been through that. There is a fixed floating charge by Rajinder Kumar, who was one of the original, I believe, founders of Funding Secure, dating back to 12th of October 2018, which is a £1.59 million floating charge that still, as I understand, remains in place. That money, I guess, would eventually have to be paid out, so that's going to come from the realizations of the loans. In addition, Easy Invest Limited holds a fixed floating charge dated 15th of May 2019, and that's £1.23 million. The security held by Rajinder Kumar is in priority to the Easy Invest floating charge. Based on present information, I estimate the value of the company's net floating charge property to be uncertain. Arising from this, the value of the unsecured creditors fund is presently estimated to be uncertain. Based on present information, it says in this report that it's unlikely there will be a distribution to unsecured creditors. So there you go. And then we go down to the costs. Total fees amount so far £918,283.29 plus VAT. So that's a lot of money that's going to the charges. We've had, again, completed property redemptions according to the spreadsheet report here, 13.46 million. We've had insolvency property redemptions of 35 million. So, and then we look at the expenses here, the legal costs. This is some of the expenses. There are more. £3.611 million in receivership insolvency costs and expenses, and then another $1.4 million in receivership insolvency legal costs. So close to around £5 million in that, just in those two costs right there. Obviously, there are other costs. So yeah, we got £827,000 in frozen funds, and $6.619 million in an administrator bank account. So a lot of money now in frozen funds. 8.3 million according to this. Frozen? So needs to be sorted out. Let's I mean, this is just going to keep on going. I guess there is some light at the end of the tunnel. The money is coming in. Question is, how much of that money is going to get eaten up by legal expenses, administrative expenses, and then these floating charges? I don't know the answers to all of that, but I'm sure somebody more knowledgeable. I just read these reports when they come out every 6 months just to kind of get my head around what's going on over there, being an investor myself. High net worth lending loses a major court case. This is very interesting. This is a report on Fourth Way, a blog report that for anybody that's a lender out there in high net worth lending, peer-to-peer platform in the UK. So apparently high net worth lending, let's call them HNW, took a borrower to court for over £3 million in money that they had lent to this person and for interest. That loan represents around 5% of outstanding loan amounts. Now the judge, which is open to the public, the judge threw out the claim to repossess and sell the property security attached to the loan or otherwise to enforce it. In this loan, while the amount being claimed in court amounts to £3 million, the maximum losses to individual lenders through high net worth lending online platform appeared to be capped at £100,000, which is far less than 1 month's interest earned by lenders across all platforms. The reason the judge gave is that an anonymous lender merely designated with the number 1 by high net worth lending was not a party to the claim, and the NHW lending itself had no legal claim against the borrower. The judge found that NHW, or its director Ben Shaw, knew that the purpose of the loan was for the borrower to live in the property, which made it a regulated mortgage, but high net worth lending as an unregulated entity was not authorized to provide such a loan. Kind of a crazy ruling if you think about it. The key issue was that if the borrower was intending to live in the property, the loan would be a regulated mortgage, and HNW is not authorized to offer such loans. It is the opinion of the person that wrote this article on Fourth Way. I would expect HNW to make good the difference to individual lenders out of its own pocket. Kind of a crazy case here, and this just goes to show you how complicated lending can be if the T's are not crossed and the I's are not dotted. You can end up having a pretty expensive mistake. That these high net worth lending, I believe, is one of those websites where the minimums are really high, so people who took on portions of that loan are going to be out of pocket unless HNW decides to cover this one themselves, and that's a pretty big loan amount. Now what I'm not understanding is, does this borrower not have to pay back anything? Did they just get a bunch of free money? You know, did they get £3 million of free cash? It's interesting. I didn't read the entire article, but I've highlighted certain parts of it. The judge believed that Shaw knew that he was entering into a regulated contract when HNW was not authorized to do so. These are all factors that every insurance actuary would take into account. There's some other interesting things about the article, but again, it really goes to show that the importance of the people running companies like peer-to-peer lenders who know what they're doing legally is super important. I think this is why again, not financial advice, but I like companies like LoanPad, because you got a lawyer who is running the company, who's the founder and understands how to legally set things up, so you would hope. You have other companies where we're not quite sure the backgrounds of some of these people running the companies, and they can make mistakes, and that is obviously one of the mistakes. And not just HNW, we've seen it in other peer-to-peer lending companies too, who have also made some mistakes and ended up in court with some of their loans. So if you're an HNW customer, pay attention to these kind of things. I don't like it when things like this happen. It makes me very nervous. I don't know anything about HNW. I've never invested money through there. But when I see a mistake like that being made where somebody in control of the company knew what they were doing according to the court system and made a loan when they knew they shouldn't have been making a loan, makes me very, very, very nervous. So, pay attention to these kind of things because that can be what takes companies down. Let's see. See what else we got here. Just log in. There was some updates on Money Thing that was sent through. Notification that they'd updated some of the loans. I wanted to just kind of take a look at the loans that I have on the platform still. Some defaults still here, defaulted loans. I don't know, I have about £1,000, a little bit over £1,000 of defaulted loans. Some crystallized losses on the account. One of them here, the Ferrari, which apparently this Ferrari has not been able to be recovered. There's a crystallized loss. I had £224 in this loan. But on the update, said on 7/11, which is the 7th of November, regretfully, there no longer appears to be any prospect of recovery. The administrators of the borrower have now dissolved the company. As such, no further recoveries are expected, and we will shortly be crystallizing the loss. The platform will be updated accordingly. Did they lose the Ferrari? Sounds like there's some criminal activities going on there by the people that borrowed money against this Ferrari. But things are not looking too good too. I had another crystallized loss on was this 8th of November of £85 on the Newcastle under Lyme bridge loan. Yeah, and another one, default of a hotel restaurant in Pressbury. That was back in April 2020, so a while ago. So you can again see how long it's taken these loans to go through the system. And then another 6 loans here that are going through the system that who knows how much is going to be recovered on these. Usually when they take a really long time, it's not good because the administrative fees are racking up too. I just wanted to show you that and what was going on. Had a letter from the mailbox. It's kind of cool. I had a few letters, but only time for one that I thought was pertinent. Hi, Lawrence. I noticed you haven't been streaming as much recently. Hope you come back soon as I enjoy watching the weekly show. Thank you. Thanks for saying that. I've been dabbling with stocks and shares for 20 years. I always listen to your advice regarding index trackers, but I find myself somewhat bored just buying one share. So I think he's talking about an index tracker. How can I change my way of thinking? What's your logic in the shares you buy in the Trading 212 account? You seem to have done quite well. All the best and none of the worst in your endeavors. Billy in Royal Leamington Spa. You know, I didn't know that Leamington Spa was actually called Royal Leamington Spa, but thank you for the letter, the email. I thought that was cool. So, a couple of things. Shall I just show you the Trading 212 portfolio? It's doing okay. Let's look at it. There's been a couple of changes. Look, £25,274. And we are now concentrated down to 6 stocks in this portfolio. Goal is by the end of the year to make a donation to our 2 charities from the profits that have been gained on this portfolio. Right now, Amazon's sitting at 15% in the green. We got Coinbase that is 85% in the green. We got a new addition, MicroStrategy, Michael Saylor's company. We'll talk a little bit about them. 21% in the green. Nvidia, 55% in the green. Now we have almost £6,900 of Nvidia stock. Valco Energy, 19% in the green. And then our trusty Vanguard S&P 500 ETF, sitting 10% in the green. That's our sort of balancing out conservative play. What did I do? I tell you, I've been researching some things about MicroStrategy. Actually, quite a good buying point right here, 410. But we purchased 5 shares at an average price of $344 before the Bitcoin explosion. Well, it was kind of while it was happening. But to go back to this email, yes, it can be pretty boring just buying an index tracker and sitting on it for 20, 30, 40 years and doing nothing. And I get that. This kind of stuff is more exciting, right? But it also comes with some perilous decision making that can really hurt you in the long run. If you feel like you have to buy individual stocks and shares, and you want to do something like this, which I never recommend, I don't think this is a good idea in any way. I do this just for the stream. For this, $25,000 may be a small amount of money for some people, and for other people, it may be a very significant amount of money. I mean, that's money you could put down on a house, right? Or do something else with. But my way of thinking is if you feel like you're going to get bored and you have to play money and you feel like you want to do some corporate gambling like this with stocks, pick companies that make sense. First of all, I would always recommend that you have a good balance of, an index tracker backing your portfolio. But companies like these make sense, right? Amazon. When I see pictures like this on the internet, and I've seen this in person, I see Amazon deliveries everywhere. So you don't have to be a rocket scientist to understand that Amazon is number one at what they do. Will they always be that way? Who knows? But right now, and they have been for a long time, Amazon is delivering millions and millions of packages across the world every day. They're making money. I'm not an accountant. I don't go through balance sheets of companies trying to figure out value propositions on stocks because honestly, sometimes these companies report amazing earnings and the stock price goes down. It's sometimes not even interconnected at all. What I do is go based on sentiment, and I see things that make sense to me. Like Amazon is Amazon. You probably sit on this stock for 20 years and be fine. What else do I look at? Coinbase. By the way, I did liquidate some of the Coinbase shares today because the profit was there and it's never hurts to take profit. You can see here I sold 1,000 pounds worth on November 11th at 314, a gain of 472 pounds. I sold another 1,000 pounds on the 19th, so just a couple of days ago. You can see here another gain of 493 pounds at 322 US dollars. And then today I sold another 650 pounds worth at a price of 310 at 308 pounds profit. It never hurts to take profits. My goal was to add some of this money that we've made from Coinbase into MicroStrategy, and I'll explain why. But a company like Coinbase, all you have to do is go log in to that. This is their live trading on their Coinbase Advanced. You see all these trade histories over here? You probably can't see it because it's quite small. But if you look over here, where my mouse is on the right side, you're going to see that every single one of these trades is making Coinbase 1% in revenue. And these trades are going bang, 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 bang through. Right? And this is just what's happening on their trading platform. If you go to their regular platform, which a lot of people use, they're making about 3.5% on a trade when somebody buys cryptocurrency, Bitcoin and other cryptocurrencies. It doesn't take a rocket scientist to know that this company is making money. They may not do as well as projected, but they're making money. So on a very basic outlook like that, you can see, okay, well, cryptocurrency is doing well. People are on Coinbase, people are on companies like Binance, and they're making trades, and Coinbase is making money. What else? NVIDIA, they posted that they had some problems with the chip overheating. They're going to fix those problems, and Elon Musk and Tesla will take as many NVIDIA chips as NVIDIA can make. makes sense that in the long run that price is probably going to continue up because its sentiment is high. Valco Energy, it's a very very risky energy stock play. And then the Vanguard S&P 500, you know how I feel about index trackers. So not much explaining needed there. MicroStrategy. This play comes along with wanting to get a little bit less out of Coinbase to take some profits and to put in what I think was going to be a very fast moving stock. And you can see here, MicroStrategy has run very, very volatile stock. You see down here, it was in the $200 range just a month ago, and it's almost up to 525 and has now dropped down to 400. So very volatile, but the basis behind MicroStrategy and Micah Saylor, who wants to accumulate as much Bitcoin as possible and hold it and never sell it. His company is going to do well or badly depending on what happens to the price of Bitcoin. Now, as you know, I've been researching Bitcoin since 2013, so I have my own thoughts and feelings on how that's going to do in the future, hence the purchase of these MicroStrategy shares. Now, you should also do your own due diligence, of course, on everything that you want to buy. I don't recommend that anybody ever do anything other more than just buy a tracker fund. But if you feel like you must start doing this type of stuff, use your brain. Warren Buffett said, all he does is buy shares in companies that he believes in. So there you go. It's as simple as that. Let's talk a little bit about what's going on. And it would be remiss of me not to talk about cryptocurrency and what is happening right now. Let's look at the price. We had kind of a historic day today where the price of Bitcoin, I don't know if you can see this. Let me go to this main screen here. But the price right now is sitting at $98,511 US, which is about 77,000 pounds, I believe. The price did eclipse $100,000 today briefly and has run back down. Very high octane. What's going on right now? Parabolic. Everybody and their mother wants to get into Bitcoin right now. And, I've always provided you guys with information. I never tell anybody that they should or shouldn't do anything, but I do try to front run things. I try to think about logically what is going on in the investment markets and how can we get ahead of that and make a decision that, our risk to reward ratio is way off. So we want to take smaller amounts of risk for a really, really high reward ratio. And this is what I feel about Bitcoin. Ever since our U.S. elected a new president who people say is very pro-Bitcoin, I don't know what he's going to do, but I've read the news. And I keep going back to this debt clock here. That nobody has come forward and offered any solution to how the UK pays off 3.8 trillion in national debt, how the US pays off what has now eclipsed 36 trillion of national debt, when they're only bringing in 29.3 trillion in GDP, gross domestic product. Nobody is addressing this huge elephant in the room. How is this going to get paid? So what is the answer? The answer is there is a U.S. senator in Wyoming. Her name is Senator Loomis, who is very, very pro-Bitcoin. And she has put together a bill where her solution is to create a strategic Bitcoin reserve in the USA, which the U.S. would buy 1 million Bitcoins, and they would hold it in their national reserve for 20 years as a way to dig them out of this hole that they cannot get out of. And they will not be able to get out of this hole. The president of the USA will not be able to do it because it's gotten to be so bad now at this point that this deficit is huge. China is, you can see here, is on a surplus. They're bringing 17.8 trillion of gross domestic product, with their national debt is 14.7. So they're actually able to decrease that. But other countries are not, including the UK. Japan is wildly unbalanced. And some other countries on this list that cannot get a grip on this national debt problem. So what Senator Loomis is saying is that the U.S. buys 1 million Bitcoin, sits on it, and the price appreciation of Bitcoin will be able to be used to pay off this national debt problem that they don't have a solution for. Right? Obviously, government wastage is a huge problem. Okay, so this is supposedly a decentralized item. They can't, I mean, I guess the U.S. could buy equities, they could invest in the stock market, but that would be considered a conflict of interest. And because they consider it to be Bitcoin neutrally owned, it is not controlled by anybody, that it is something they could put into the U.S. Reserve to help pay off this debt problem. So Mr. Trump promises to create this Bitcoin reserve. Again, political promises taken with a grain of salt. We don't know if that's going to come true or not. But he has a very pro-crypto agenda. He spoke at the Bitcoin conference in 2024, probably to get votes, because, politicians do what they can to get votes. But there are many people that believe that this Bitcoin reserve will at least be attempted to be executed. And if that does happen, where 1 million Bitcoins are purchased over I think it's the next 5 years, and held for 20 years, that the price of Bitcoin, is going to really explode. We're talking about front-running things like front-running investments. It could have quite easily have gone the other way for Bitcoin if Kamala Harris had won the U.S. election. I would have think nothing particularly spectacular would have happened like this. Bitcoin still probably would have increased, but it would have been more slow and steady instead of this parabolic price explosion that we've seen. But there are some people saying that, doing basic calculations, if the U.S. buys 1 million Bitcoins, that we're going to see anything from a $250,000 to a eventually $10 million Bitcoin price. So who knows? Nobody knows what is going to happen. But we do take educated guesses on things and, read these reports. It makes a lot of sense. And then if the U.S. does adopt this Bitcoin reserve, it's saying that other countries are going to follow suit. And if other countries follow suit because they see it as a way to get out of debt, then obviously what comes next is large price explosions on this Bitcoin price. And let's face it, most people, they only care about Bitcoin because of the price. They want to make money. That's it. They want to make money. They're trying to beat inflation. They're trying to beat the exploding costs of things. Have you seen how much a car costs these days? It's expensive. So articles like this that are coming out, the U.S. Bitcoin Reserve Plan would ignite or could ignite global crypto arms race, will trigger worldwide demand and push prices sky high. So people are saying, they ask me, am I too late? I say, you're early. I believe that we're very early, and if this comes to fruition, these prices are going to absolutely shoot up. Bitcoin expert warns the dam is about to break. This is Fred Krueger, who's written books. He's considered one of the top people when it comes to cryptocurrencies, and he says it's a perfect storm because of what's happened in the elections, because of the ETF adoption in the U.S., that the price is absolutely going to take off. What Donald Trump's strategic Bitcoin reserve could look like. The U.S. government currently holds $18 billion US, about $200,000 of Bitcoin that have been seized mostly from criminal activities. That's pretty cool because they probably didn't know what they were doing, but the price of that has gone through the roof. It's given them some real assets there, $18 billion. It's not huge compared to the government debt, but it's there. Trump could be a catalyst for crypto adoption. Pennsylvania's Bitcoin initiative. Trump's proposal is gaining traction at the state level. On November 14th, 2024, Pennsylvania lawmakers introduced the Pennsylvania Bitcoin Strategic Reserve Act, which would allow the state's treasury to allocate up to 10% of its roughly $7 billion of state funds into Bitcoin. This is a bill first of its kind and represents a significant shift towards recognizing Bitcoin as a viable asset for state investment portfolios. And here is why I think we're early. Widespread Bitcoin adoption remains far off. A lot of people don't even know what it is, and they don't know what the price is. But you have to pay attention to things like this, where at the state level in the U.S., that they're looking toward being able to add Bitcoin as a reserve, because the governments are in financial trouble all over the world, and they're looking at this as a way to get them out of trouble. Is it risky? Absolutely. Absolutely it's risky. It's volatile. But this is the reason I see this as the only option that state governments have to get themselves out of a massive holes that they've dug themselves into. And that's why this is something really interesting to look at. We've also got Michael Saylor of MicroStrategy, who has now got a Bitcoin reserve of MicroStrategy now 26 billion US, which they acquired at an average cost of 42,888 per Bitcoin. This guy is buying. He bought $4.5 billion US worth of the stuff a couple of days ago, and he's issuing debt and bonds through his company, MicroStrategy, to buy more. This guy wants as much of it as he can get because he believes the price is going to rocket up and it's going to provide shareholders with amazing returns on the stock. Is that risky? Of course. Yeah, absolutely risky. You can see here MicroStrategy jumps another 16% on a $4.6 billion Bitcoin purchase. And also in the NASDAQ, we had Bitcoin options that have arrived on the NASDAQ. Now you can trade options on the US, things like the Fidelity Bitcoin Trust ETF. So this is going to happen in other countries in the world too. This is just kind of the beginning. People have been saying no to Bitcoin for a long time, and it's just I don't know. You could say no for a long time to something, but when things are kind of in front of your face that you're seeing happening around you, there comes a point where you have to do research, whether you think it's a good investment or not. There are people that say, of course, and they've been saying this for years, it's not a good investment, it's too volatile. But if this the price of Bitcoin runs to $1 million or $10 million, the people who sat on the sidelines are going to be very, very disappointed that they did not at least get their toe in the water a little bit. And it's going to be very interesting to see what happens. If this Bitcoin treasury in the US comes, it's going to bring severe legitimacy to the asset class, and a way to front run that right now is to look at it and say, this is an investment I'm worth taking a gamble on. For me, it has been, yes, absolutely. For some people, it may not. But it's very, very interesting to see what's going on. So right now, 98,671 market cap of. Now, the cryptocurrency global market cap is 3.27 trillion. So think about that. 3.27 trillion US dollars have gone into these cryptocurrencies, which is still a blip on the gold, but it's surpassed silver now at this point. Silver, I think, has a market cap of 1.5 or 6 trillion. Gold is about 17 trillion. So it's heading that way. But very interesting nonetheless. Hope you enjoyed the content today. If you did, or this evening, enjoy. Hit that thumbs up. We ran through a lot. It's been an hour. I'll see if you have any interesting comments, and I'm going to let you go and get out of here. Nottingham. Oh, Stephen Hale was in Florida enjoying the mid-80 degree weather, and now it's freezing back home. Yeah. Sorry to hear that. Philip from Landlord Invest ended up in the hospital due to the stress. That's, yeah. You can't imagine what type of stress that would put on you as a business owner. It's not good. I agree, Dave Dawson. If they're being forced to wind down, the FCA should let people know why. Landlord Invest put out a general update to all investors informing of FCA investigation and advised investors to withdraw all funds as they become available. I didn't see that, but I found out via the Financial Thing group. Yeah, if you're not a member of the Financial Thing group on Facebook, you should be. Landlord Invest were betrayed by one of their lending partners and now FCA, effectively strangling them. Shame. I like Landlord Invest. Sympathies to Philip and the team. Agreed. Yes, I will read that entire article on the Fourth Way HNW case. I do want to see what happened there, see if I can get a better understanding. I'll do that for next stream. Instead of individual stock picking or general market index trackers, how about choosing ETFs of specific themes or sectors? Yeah, you could do that. Oh, I like the picture too, Jimpo Naughty. Very nice. You can do that. The problem with that is I think if you look at the historical prices of sector-themed ETFs, it's like stock picking. You'd have to pick the right sector. And a lot of people, what they do is they pick the sector, and when it starts going negative or doesn't perform as well, they're jumping from sector to sector within the ETFs. And then other people over-diversify and buy a bunch of different sectors, and they end up doing worse than just taking like an S&P 500 ETF. So again, picking the sectors that are going to run well and those that don't it's very difficult. And it becomes also, I tend to watch this stuff too much. Like I'm checking it too much, and it becomes a big time suck to where almost stressful, where, like the Trading 212 portfolio is a little bit stressful because I'm checking prices and I'm trying to avoid making a mistake. And I don't want to be spending my time just watching these things, and I can be a little bit crazy when it comes to, stock picking portfolios. When I had just an index tracker and nothing else, it was a relief. It's kind of like having too many peer-to-peer lending platforms and being invested through too many. You're constantly having to keep up with them all. And it's easier just to do one thing. Or with peer-to-peer, you've got to have more than one platform. But it's nice to have one ETF, one thing that historically has performed at a certain amount historically, and not have to worry about switching sectors and trying to figure out which one's going to do the best and which one's not performing. So just my take. Anyway, I'm going to get out of here. I think next week is the U.S. Thanksgiving. So it's a good likelihood that next week I'll be streaming on, I don't know, it may be Wednesday, or it may not be next week at all. But check your emails, check the Facebook group. I'll post if it is next week. It won't be Thursday. I know that because it's Thanksgiving here in the U.S. So I'll see you next time. I hope you enjoyed the stream. Please subscribe. If you're not subscribed, consider joining the Patreon. Thank you for all the loyal Patreon members out there that have been with us for so long. Really appreciate you. And I'll see you next time. That is all I have for you. Have a great weekend, everybody. Take care. Bye.